indeed, we had a successful year and were able to not only compensate large losses, but also inflation in the course of the year. Finally, diversification turned out to be very positive for us. For the year going forward, we think the reinsurance market is continue to be very hard. So we're very optimistic that we're going to continue to grow our book with probably even higher margins and based on a very balanced and well-diversified book as we currently have.
Yeah, and what about the combined ratio, which we all know is a key measure for the business? How much improvement are you looking for over the course of this year?
Well, first of all, the 1/1 renewal was a very successful one for us. We improved our risk-adjusted prices by 2%. And risk-adjusted means we fully deducted all the inflationary effects from that, all model updates, model changes, climate change effects, you name them. All those effects are already deducted. And then on top of that, we have 2% margin improvement, which will fully flow through the earnings and fully reduce the combined ratio going forward. Now, the technical difficulty is that we are going to switch to IFRS 17 going forward. And this additional will just, from a mathematical perspective, just further reduce the combined ratio. And therefore, our guidance for the year is 86% combined ratio. But careful, that's not all margin improvement. A lot of the change is based on just a different calculation method.
Christoph, can you just talk us through the natural catastrophe side at this stage? Because in the numbers, clearly this was a big feature.
Absolutely. We were pleased to see that for the full year, the natural catastrophe or the large losses for us were perfectly in line with our initial expectations or with our large loss budget. But indeed, it was another year where industry-wide the losses were very high. And in particular, Hurricane Ian was one of the biggest and most severe hurricane events we had in the history. And so that was really one of the major events we had to digest.
When it comes to man-made losses, major losses here, the war in Ukraine has been cited as well as we come up to the one-year anniversary. Can I just get into these numbers? 1.74 billion, the number cited, part of this due to the aggression that we've seen in Ukraine, tallying up to 475 million euros. As the war continues on, does that mean we should expect further items around man-made major losses this year?
Yeah, well, with an ongoing event, it's always hard to predict. We set our reserves on, in a conservative way based on everything we know at this point in time. But obviously, the longer the event goes on, the higher the risk that additional claims will occur.
And when it comes to reinsurance renewals, I noted that you've got an increase in volume, up 1.3%. In a pricing environment, when you've got better action from your side on the pricing, what does that mean on the volume side? Where are we seeing some erosion there?
Well, the volume grew by 1.3%, but we deliberately decided to not continue businesses which are not in line with either our requirements when it comes to terms and conditions, or also from a pricing or risk side. So we continue to just pick and choose those businesses where we are really convinced we get an adequate compensation for the risk we take on our balance sheet.
And Christoph, very interesting that you've decided to launch a new share buyback program, which was announced on Wednesday here. My question would be this. What does that tell us about the business opportunity that you see? Is there any relevance to the fact that you're prepared to retire another €1 billion worth of shares, even as you achieve your solvency targets? What does that imply about the state of opportunity to develop new business?
Well, I think on new business, it only implies that we were able to grow our business and will continue to be able to grow our business in such a profitable way that expanding our business substantially is possible, and at the same time repatriating more and more capital. So it sounds like a contradiction, but it isn't in our case, as long as we are able to really grow the book in a profitable way.